how to use volume to manage your trade as a Confluence. All right, the three things we have in trading is you need to have your strategy right, you need to have your psychology right, and that way you are able to manage your trades properly. It's the first thing to be able to identify a setup. It's another thing to have the courage to take the setup. It is another thing for you to be able to manage that trade effectively, so you come out of that trade profitable. So far, the buyers or everything that was, you saw before taking that trade was, correct. Let me use that word, correct. So you need to know how to manage your trade. There are certain people, they go up into significant profit only for the market to stop them out again at break even without them taking any partials or any form of profit at all. Consider it like this: you went to work for a whole day and you were given your pay for the day, but you told your boss, no, don't worry, keep the money, and then you go home like that. That's break even. Or better still, you go up significantly in profit and then price comes to stop you at stop loss. It's like you going to work, working, and then you receive your pay, you tell your boss, no, keep the money, and then you even pay him for the work you did. How stupid does that sound, right? So that being said, let's move into this. The first thing you want to do for you to be able to manage your trades using volume is you come to your indicators like this, and then you search for volume profile. So you search for volume profile like this, volume profile. When you search for volume profile, you want to select this volume profile and indicator by DGT. All right, this one by DGT right here. Once you select that one by DGT right here, this is it. It's going to be very, very scattered. You're going to see a lot of scattered things on your chart. So that brings us to the customization that I was able to do, because when I newly saw this indicator and I tried to use it, it was really, really messy. My chart was so messy. So as you can see, I disabled the volume profile, disabled sentimental profile, and so many things. I disabled them away from my charts. The only thing I needed here was on this volume histogram here. So you want to have the volume histogram, you want to have the volume moving average, then you can customize the bullish and the bearish color, which is the growing and the falling, then the moving average color also. Pretty much that's just all you need. Every other thing on this, I don't really need them because it makes my charts too messy and I can't see price action any longer. So that being said and that being done, now you have volume on your chart. As you can see, this is gold right now. This is gold right now. Gold is in a serious this is Asian session. I'm making this video 2:12 a.m. in the morning, so Asian session. You can see on the volume profile, you can see that the buys, the buyers are really in control of the market. You will be a fool to be shorting the market at this very moment, even though you are seeing a rejection. Okay, you are seeing a rejection at this point, but you'll be a fool to think that probably this is a rejection and then you want to go short, because clearly you can see that there is no single, for the past 1 2 3 4 5 6 7 8 9 10, something like that, there is no single seller in the market. There is no seller in control of the market. The last seller was so weak, and see how strong the buy volumes are. So if you want to take a trade at this point, you should be looking forward to taking longs. That's just the beauty of volume. Volume helps you see price. A candlestick might be manipulated. Look at this now. This is a rejection. You might think, okay, a pullback is coming, sellers are coming to the market, but the volume will tell you this is just so strong. So that being said, you must have watched my previous video, or if you haven't, where I did this trade breakdown. So now here is how I manage this trade using volume. So when I entered this trade here, this was around 9 o'clock. Let's use it at that, 9 o'clock April 15. So you want to, when using volume to manage trade, okay, this is already past. This trade has already played out. Okay, now I'm teaching you how you're going to use it, in the present, because you're going to be trading the forward. All right, so you want to go higher in time frame. So someone like me who trades with the 15-minute time frame, I want to go higher to the 1 hour time frame. That way I see a clearer picture of what price is doing, and you want to manage your trade with volume. So let's say price came to these very points here. Okay, let's use this. Price came to this very point at 8 a.m. in the morning, right? So let's check on the 1 hour time frame what it was, how the volume was. So this is 8 a.m. in the morning. As you can see, 8 a.m. in the morning, the volume was still, the buyers were still in control. So you do not, yes, it has hit your point of interest, but you do not take a shot from there. As you can see, I explained in the previous video there, 8 o'clock in the morning, yes, see it, so buyers were really in control. Then 9 o'clock, sellers started coming in gradually, bit by bit. So you see, from 8 o'clock here, 9 o'clock, this is okay. We have about 4 candlesticks, 15 minutes, 15 minutes, 15 minutes, 15 minutes to make an hour. So 1, 2, 3, 4. All right, the fourth one here, sellers started coming in according to the 1 hour time frame. See it here, 9 o'clock, sellers started coming in into the chart. So, and we started seeing a kind of retracement. Right? So now the next one was what? 9:15 to 10 o'clock. So now, which means, okay, moving backwards, because I'm trying to explain this. This is something that has passed, but I'm trying to explain it in a way you guys can take it in the future. So now we had this huge rejection here. Okay, this was the huge rejection, and price started coming down, which means it has respected this particular point of interest. Now you want to take a shot, which means you want to take a shot in between 8:15 here. You can see the time, 8:15 to around 8:45, or let's say till 9 o'clock. So you check the volume now. You want to enter the trade, and it's around that kind of period till 9 o'clock. Who is in control of the market? Is it the buyers or the sellers? Look at it here. So 9 o'clock, sellers started coming in. That signifies, okay, a nice conference for you to take. Okay, this is correct. I want to take a shot. The volume is showing me that sellers are in the market. That's a nice idea, which means the previous hour they were buyers, but now the sellers are coming in, and it is in line with your point of interest here. So yes, you can take the trade. And as you can see, till 10 o'clock, sellers were in control. All right, so now from 10 o'clock here, now this is where volume makes you have peace of mind when taking trade. You can see this was a strong pullback. Some people will start getting scared that, okay, maybe probably the price is going back to hit them at break even. But look at it, 10 o'clock. Let's check 10 o'clock. Were sellers or buyers in control? See it, 10 o'clock. Sellers were still in the market. Even though on the 15 minutes time frame here, you are seeing a kind of strong pullback to the upward side. You know, you might panic. It's normal. We are human beings. We have emotions. You might panic and be like, I think the market is coming back to stop me out. Just go up higher in time frame, check the volume, and you can see sellers were still in control of the market. 10 o'clock, and you have nothing to fear. You have nothing to fear on this particular trade. And look at it. So then the next one is 11 o'clock. So we had this until 11 o'clock. Let us check what happened. By 11 o'clock, okay, buyers started coming into the market, and you can see, let's check the price here. By 11 o'clock, buyers started coming in. Yes, the price was still in a downtrend. Okay, this is what I'm talking about in terms of volume. The price was still in a downtrend, but it started signifying on the volume that buyers are coming into the market. And you can see from 11 until 11:45 when the TP was hit, and now 12, you can see there was a sharp reversal in price to the upward side. Look at it on the one hour time frame here. 11, 12, you can see the spike where buyers came into the market. So the volume has already signified you ahead of time, even when the candlesticks were yet to form, simply because you moved up in the higher time frame and check the volume. So from that 11 o'clock, it already signifies buyers are coming. So immediately I hit my TP on this trade, you can see the sharp reversal. And then I think there was a kind of news during this period or something which made price drop sharply down again, because you can see the high sellers that came into the market, and you can see that massive drop again. And then we had the buyers, and that was it. Okay, that was it. Now on the 1 hour time frame, you can see this is a serious uptrend. And what are we seeing? Even on the 1 hour time frame, we have buyers in so much control. Okay, so much control. So that's just how to use, use volume to make sure that you manage your trades well. So when you are in a trade and you are getting confused, probably you are seeing some kind of pullbacks you don't like, just move to the higher time frame, check the volume on the higher time frame, preferably the 1 hour time frame. For a day trader who is trading with 15 minutes time frame, or maybe even 5 minutes time frame, you can use the 1 hour time frame and check, so it kind of give you a peace of mind. So if you are short and then you have sellers in control of the market, in terms of volume, keep trading your short. But by the time you start seeing a serious spike in volume, the buyers are coming in, my friend, best idea is to exit that particular trade. And if you found any video from any value from this video, make sure you hit that like button, hit the subscribe button, and I'll see you guys in the next very video. Peace.